Hello friends, welcome to Nirmal Bang. I am Piyush Jain and today we are bringing to you a corporate conversation. An interesting company in the jewelry sector which is now going to get listed on the market and IPO is coming up your way. We are talking about a 2000 crore plus company, a company where actually we have seen the sector really perform by leaps and bounds. We have seen some great legacies being built into the sector from Titan, and there have been host of names again which have come and got listed and they really created wealth for the shareholders. We are talking about this new entrant into the market, listed market, and that is Senco Gold Limited. And now let me invite the management, Mr. Suvankar Sen, MD and CEO, and Mr. Sanjay Banka, the CFO of the company. Gentlemen, welcome to the show.
Everyone. Hi, everyone.
Hi, good morning.
Now, before we start, let me put some facts before our viewers. The company is putting out the IPO, which is going to open on July 4 and going to close on July 6. The price band, which has been fixed, is at 301 to 317. At the upper band, company is almost going to get valued at 2400 crores plus, and also will be able to raise around 400 crore plus. Now, out of that, actually, we are talking about roughly a sort of fresh issue of shares worth 270 crores, where the money is going to go into the company. And there is also a exit of investor, I would say a sort of existing investors who are putting up some shares for sale, and that basically is worth 135 crores. And the investor basically, which has a material sort of stake in the company, is Safe Partners, a well-known private equity arm. And apart from that, we are actually talking about some sort of good investors who actually are also sort of taking part in the IPO. There are lead managers, which are IFL Securities, SBI Capital, and Ambit Private Limited, which are managing the issue. But before we start our discussion with the management, most important part, we have seen over the last 2-3 years, there has been some revenge buying from the retail consumers into the jewelry market. So before I go into the business model, I think our first question, the inquisitive question to the management will be, it's almost 3 to 4 months before Diwali. Is it a perfect time for them to get listed on the market? And was there a reason actually they thought about? Let's ask them. Bankaji, let's come to you first. Why now in terms of IPO of the company, and how has been the journey for you?
So, Piyush, thank you very much and giving us an opportunity to speak to you. The timing is all decided by the God and good times. So we have been working on the IPO for quite some time, and we saw the investors' interest was quite overwhelming. We were ready with the IPO, and our documents were ready. We had received the SEBI approval. So this is the most opportune time for us to enter the market. And I think every time is good when the intent is good, when the end result is good.
Absolutely. So, Ankaji, let's come to you and help us understand about the business model of the company, how this company is different, what's the mode of the company, how the investors should really look at the company from the perspective of lasting return ratios. And also, when you talk about a jewelry company, you start talking about gold jewelry, silver jewelries, diamond jewelries. So help us understand from what the sort of different aspects on which actually the sort of money cash flows are coming in.
Right. So first of all, one needs to look at 3 to 4 points what the investors has to consider to invest into Senco. See, the first point is the fact that financially, as you have rightly put out, the historical numbers, if you look at it, it has been a consistent story of growth and profitability in terms of return on net worth, in terms of CAGR growth of almost 90 to 20%, a return on net worth of 16 to 19%, a PAT of about 3.5 to 4%. So these are financial performances over the years that have been consistently growing. In terms of the business model, if you look at it, it is quite unique because very few jewelry companies in the country have a great blend of company-owned, company-operated stores and franchisees. So out of the total number of stores that we have, about 75 are company-owned, company-operated, and the remaining 60 odd stores, 65 odd stores that we have are franchisees, where the franchisees are investing into the capex, into the inventory of the store, And it is because of this amazing blended model that we are working on, we are being able to give the return on capital and the stock turnover ratio at a very good, attractive way, and that is what is generating the returns. So these are certain critical points. Also, as a company, jewelry is all about trust. It is about legacy. That is the aura that is created around a jewelry brand. We are a jewelry brand which is more than 50-year-old brand, over four generations. It has been almost 15 years that I have joined the business. When I had joined the business, it was only about 130 crores worth of turnover. And as we speak, in the last financial year, we have crossed 4,000 crores of turnover. That's a 30x growth over the last 15 years that has been done with all the cumulative effort of our team, of all the members of the group, everyone, all the stakeholders. And this is what I feel is a great opportunity. So along with the fact that we have SAF partners and also Oman India joint venture fund, so two private equity players as a shareholder in our company. As SAF has been with us for almost 9 years now. SBI Oman joint venture fund, after a lot of due diligence, invested into our company in the April 2022. So you can imagine that two private equity players in the company speaks of the transparency of the system, of the processes that we have created. So these are certain key reasons. And as I said, that the trust is built through time. There is an agency called Trust Research Agency. They do evaluation of all the brands in the country that who are trustworthy. So we are considered to be the second most trusted brand in the jewelry industry. So
Sure.
there are such good points. And through our own store franchisees, we have our websites, we have our app. Through various tools and means, we are reaching out to our customers so that they can see our designs. And that is also very interesting. You will be happy to know that something we have called a My DigiGold, which is an app and a portal in which consumers for as low as rupees 250, 300 can buy gold and save it. And then they can later on redeem it at any of our showrooms, or if they want to sell it back, they can sell it back. So we are also thinking of the needs of the new generation, of the millennials, of the Gen Zs. And through products, through services, we are trying to create such various ways of reaching.
I'm absolutely. I'm interested in knowing actually about what is the sort of total customer deposits you have right now, because there are a lot of examples in the global markets also in terms of jewelry chains. There is a very famous listed player in US which actually also is operating in jewelry sector, but it's also a proxy financial business. So what is the sort of quantum of customer deposits which you have right now?
Mr. Banka,
Yeah, the customer deposit we have is in the range of 200 crores. And this is a very interesting working capital option for us. So it's a win-win situation for us as a company, where we generate cash for our business expansion. And as far the customer is concerned, they get attractive offer. So and our this SY Yojana, which we call, we've got three schemes: 6-month scheme, 11-month scheme, and 18-month scheme. And effectively, customer gets benefit to the extent of 15 to 16% per annum in terms of additional benefits and discounts over and above the prevailing discounts. And our this scheme is rated as A by ICRA.
Right, sir. Mr. Banka, I don't know if the numbers are handy with you right now, but in terms of these deposits, what sort of cost of deposits it would be? Like you would be already like purchasing the sort of gold for them, or there's a cost of deposits? Like, is it sort of helpful in any way in sort of in your working capital also?
No, there is no cost of deposit. See, when we borrow from the bank, we pay a blended rate of around 6%. On a gold metal loan, we pay around 3.5%, and on a CCW we pay around 9.5%. And here we are getting this money in advance from the customer. We don't pay anything in cash to them. What we give to them is an additional discount, which is part of our business cost. So if you ask me what is the cost is nil. But we give certain incremental discount to them, and as far as the customer is concerned, they get incremental benefit to the extent of 15 to 16% per annum.
Right. And in a way, it's actually a upfront commitment. So this is one of the most interesting parts of the business. And perhaps as it grows, it's actually is going to become more and more interesting. Coming back, Mr. Banka, an additional question, sort of just out of view here. The return on net worth has been in strong double digits, 17%, 18%,
Yeah.
15%, very strong number.
Hmm.
Obviously, in the last 3 years. Last year, there was a dip. Was there any particular reason, or you had a massive inventory build-up, asset build-up, new stores launch? Like what happened last year?
No, there's a very marginal dip. So in the March 22, it was around 19.8%, and this year was 18.9%. So a 50 to 70 basis point difference in any business is depending upon the future investment. So we are constantly investing in the future. So last year we invested in manpower. See, a strong manpower is very important for us to take the business to the newer heights, which we are aspiring and perspiring both. We have invested in our marketing and brand building. Rather, our gross margin has improved last year. Our stud ratio has improved last year. It's a balance of higher earning and investing in future. So we see the movement in return on net worth from that perspective. And to our understanding, we are among the best and among the top in top two or top three in India in terms of return on net worth.
Okay. And Sumankaji, coming back to you from the perspective of stores, help us understand the geographic spread. What is the geographic concentration here, both for company-owned stores and franchisee stores?
So, if we look at the overall geographic spread of the companies, out of the 140 stores that we have, around 70 to 80% of the stores are in the eastern part of the country, and around 15% of these stores are in the northern part of the country, and only around 5 to 6% of the stores are in the western and southern part of the country. The focus that we have is that we have to leverage on the goodwill and the brand name that we create and penetrate into the tier 2, 3, 4 cities of the country, so that we are not only present in the bigger metro cities where we can grow with the urban growth of India, but we also want to grow with the rural Bharat, because India overall, as you said, that is it the right time? See, India is in the cusp of growth. It has been already growing, and the next 10 to 15 years will be another amazing growth journey for the country, and we want to be a part of the growth journey. And we are very much aware, like just like a DMart strategy of penetrating deeper and deeper into the smaller towns or the more and more locations. We want to have a hub and spoke kind of a model in eastern or northern part of the country. That is our focus areas. And while we build up our stores in the bigger cities, we want to, using the franchisee network, using whatever our company owned stores, we will penetrate into the smaller towns also. And the shift of the industry happening from the unorganized to the organized sector, and I think that as an organized player, we would like to be a part of this change, a part of the shift, and bring out the best of our designs and services to the customers.
Right. I'm tempted to ask you because in South there is huge demand, but there's also very high competition also. What's the sort of margin profile and margin difference between when you're operating in East, your home territory, and actually when you go South or go North? How's the sort of difference in the margin profile?
So see, you have rightly pointed out that South, the market is much larger, but the competition is also higher. So while you can get higher volumes, but in terms of margin, you will be, you have to be ensuring that you are taking the right kind of steps to get the margin. So there is a difference of almost, I would say, 2% in terms of the South and the East. So this is how we are looking at it, and it is also because of the design, the taste, and the consumption of the consumer. So in certain markets, people are looking at products which are within their budget, lightweight jewelry, the fell-out kind of a work. So they are willing to pay a 1-2% premium for that kind of product, because it is solving a problem of theirs of creating a jewelry which is within their budget. In certain markets, there is a demand for diamond jewelry. Now diamond jewelry, we all know that it is a desire of the of the consumer,
The
of
Western
the
market.
women of India. So there, if there is a little marginal higher margins that we can charge for the effort that we are putting to create a beautiful piece of diamond jewelry, the consumer is happy to pay that. And north part of the country is a big consumer of diamond jewelry. So this is how the blends and the margins keeps changing from zone to zone.
Right. So let's also talk about in terms of fund usage. A lot of money is coming into the company. From that perspective, how the sort of usage going to happen? What's the plan?
So if you look at our DRHP, it is used. It will be used for working capital. So for whatever we would like to, like the way if you look at our historical past, that every year we have been opening a number of stores and franchisees. So similarly, the funds basically is for the future growth of the of the company, and that is how we will be using it for working capital and growth.
So, just to go back to Bankaji, what's the sort of usual cost for opening a new company store or a franchise store? Like there would be different cost.
Yeah, yeah. So basically, in the own store, we place jewelry, and the approximately it is between 17 to 18 crore in one store. And the capex cost for a store varies from 1.5 to 2.5 crore depending upon the nature of store. So you can take a ballpark figure of 18 to 20 crore per store. And but when it comes to franchisee, our franchisee model is slightly different. And since the franchisee are operating in tier 2 and 3 towns, a franchisee invests around 10 crore to 15 crore in the business, which primarily is the inventory of 10 to 12, 13 crore, and around 1 to 1.5 crore on the store capex. So this is we say that this is one of the most liquid business in any industry where you can see cash in front of you. So even in a bank, you don't have cash in your chest; it is with the customer. And here the cash is lying, the gold, pure gold is lying with you. One of the most liquid asset and most liquid balance sheet is what we say as the jewelry industry.
So please correct me. I'm just estimating. Will it be fair to say that this amount of money would be like sort of enough for opening 10 plus stores, or is that a plan? Also, a sort of additional question here, Swankaji, coming to you. Uh,
Right. No, no, you can
for
do the maths of it, and you're quite right that
Yeah.
you do the mathematics and you will get the numbers, and with the additional cushion and buffer, it will only be in this same range or a little higher.
So basically,
okay,
Piyush,
sure.
it gives us a accelerated working capital whereby we can increase the pace of growth with further debt equity ratio. So it will be moving in terms of the market trend and move faster to grow more and take capture the unorganized to organized sector.
Absolutely. One of my last questions. Any Bankaji, any particular debt which you want to retire? What's the total net debt right now?
So as we said, our total borrowing is around 1150 crore, and most of the entire borrowing is in the form of working capital. So we said we are growth hungry. We will continue to grow, and any prudent businessman will borrow from the banks and invest in future growth to give a superior return to the shareholders as well as maintain ROCE. So we are not retiring any borrowing or debt. We will with this one we'll open more store, and for further growth we may borrow more within the same debt equity ratio to grow more and give a superlative return to our investors and stakeholders both.
Right. And last question, largely a bookkeeping question. I understand SAFE partners would be like thinking about monetizing in this great opportunity, but asking the question for our viewers, any particular reason for them to sort of monetize part stake? Suankaji, coming back to you.
Yes, yes. So they have invested into our company in the year 2014. So as you're all aware that all private equity they have their times that it is a 7 year, 10 year kind of a time in which they will have to take the exit. Now we have last 2 3 years, if you see, we have a first wave of COVID, the second wave of COVID. So we lost 2 years on those. So now they are also taking only a very partial exit. So if they hold around 19.5% of the overall stake, but they are only exiting partially, and a substantial portion of their stake will continue to remain in the company. So this is more from an obligation, and what they will have to follow as per the rules of their.
Returning money to the shareholders, absolutely. That's the job of private equity, and perhaps that's why actually they're using this great opportune time for the company to monetize part stake. And with that, gentlemen, we come to the end of the show. We are very grateful. You came on our show. We are extending all our best wishes to you for a great listing, a great successful IPO.
Thank you very much. Thank you for the
Thank you very
opportunity.
much, Piyush. Thank you.
Thank you.
And with that, dear viewers, it's a wrap on the show. Hope you enjoyed it.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.